Okay, let's begin, inshallah. Hi, everyone. Assalamu alaikum wa rahmatullahi wa barakatuhu. Thank you so much for joining us. Today's webinar is on how to read a trading chart, so technical analysis for stocks, ETFs, and indices. My name is Nusrat, and I'm the head of education at Musafa, an Islamic fintech company, where we provide halal, like a stock screening for over thousands of stocks and ETFs for the halal status of them. So I'm really excited to be hosting today's session, and I'd like to introduce the person behind Swing Trade Group, Marjan Zaman. So Marjan holds a bachelor's degree in biomedical engineering from Cornell University, and he recently, alhamdulillah, completed his PhD in cancer immunotherapy. So he's been actively trading for nearly a decade, so across stocks, biotech, technology, crypto, and during that time, he's navigated multiple market cycles. So the 2017 crypto boom, the 2018 correction, the COVID crash, 2022 downturn, and the 2024 flash crash. And he gained experience and insight along the way. He's also among the very few traders who have earned consistent five-figure payouts from prop firms, something achieved by less than 1% of traders. But what really sets him apart is his approach. So he combines a wide range of indicators and chart patterns, and this is what traders call confluence. And he uses this to make his well-informed decisions, and he does it with, alhamdulillah, a very calm and disciplined mindset. So whether you're brand new to trading or have some experience, you're in very good hands. So before I hand it over, I'm going to be chiming in here and there. Uh, and we're at the mercy of our 2-year-old. So inshallah, you may see him occasionally pop in, but I'm a very an extreme beginner to trading. So I will be popping in if Marjan says something that I have a question about. I'll be asking him to clarify. But everyone here, we are so excited that you're here. Alhamdulillah, on a Saturday morning. Please put in the chat where you're calling from, but also your experience with trading. So would you say you're a beginner, intermediate, or advanced? We want to make sure that we always tailor these webinars to your background. So Marjan, you want to take it away?
Yeah, assalamu alaikum. Thank you everyone for attending on this Saturday morning. And yeah, I just really want to get into it. Let's look at the comments. Please don't be shy. Share your experience on, have you ever looked at a chart? Have you ever looked at candlesticks? Are you actively investing for many years or you don't have any money into the stock market? All of these things will help me to give you a better, introduction into the market. So with that, just keep the comments coming. And if you have any questions as well, I really want to be here to help everyone. Um, the thing that really stood out to me after I started learning about stocks and crypto, etc., was that, there is a lot of manipulation that goes on. And some people they get basically propagandized on thinking that that the average trader can't time the market, can't share the mark can't trade the market properly without knowing all these things that the big guys know. So I'm here to basically explain to you that it's not true, that there's a lot of data out there that is all available to us, and we can decide when to buy, when to sell, and time the market better. And the thing that affects me the most is, obviously as Muslims, we all want to earn money and we all want to serve God. We want to help the community, help the people. And to me, I couldn't wrap my head around the fact that all of us will be losing money together. And so the purpose of this talk is to really guide us in you know investing and trading in a way that is halal and good, and going to help us all together and basically create a community. So I see we have people from we have mostly beginners from Ohio, New York, Pakistan, alhamdulillah, long-term value investors and some option traders. And yeah, so it looks like we have a good mix of people. So let's get right into it. So here we're going to learn about the basics of reading a chart. Bismillah. So first, I just want to make a disclaimer that all of this is for educational purposes, and none of it should be construed as financial advice. And you have to always do your own due diligence, and all of the risks that you take are obviously your own. So today we're going to go over market structure, chart patterns, candlesticks, supply and demand, and fair value gaps. So it might seem very basic, but this we have to realize that a basic foundation is crucial to um, understanding all of the indicators and signals that we see on top of that. So first, we'll go into market structure. So as you all know, the stock market, the Nasdaq, the S&P 500 has just been climbing for years and years and decades. And obviously, we've had huge downturns, but we're relatively close to all-time highs. And it's really important for people to understand the structure of these funds, specifically the Nasdaq, QQQ, S&P 500, that they basically have the best technology companies. The Nasdaq has the best 100 technology companies, and S&P 500 has the best 500 companies. And the companies that don't make the cut, they get removed, and then other companies are added into it. And the idea here is that all of these best companies have a business plan, a business model of growth. And for those who don't meet the cut, are cut. So basically, these funds are designed to be great. They're designed to be perfect. They're designed to have demand that we always want to be invested and buy more of these best 500 companies. So in that regard, being so this is the first piece of knowledge that you have to learn. And if you have that first piece of knowledge, it is that if you will dollar cost average month by month, year by year, you should be returning a profit. You should be gaining value with transferring your investment currency, fiat money, into stock assets with companies that are designed to grow. So this should help you against things like inflation, et cetera, to at least put you on level playing field. So with that being said, this is the structure of that market where we're constantly making higher highs. And what's more important about an uptrend is having higher lows, because this is where the institutional buyers, the real big money, are placing their heavy buys at good discount values to keep the market growing because they know what levels these are. The opposite structure is a downtrend, and it's usually triggered by this market structure shift from a lower low that is not able to sweep and create a higher high. Now, this shift is really important because I'll show you in the next slide. Well, when you have this downtrend, you have these lower highs. That's what's significant about a downtrend. For an uptrend, you have higher lows with hopefully higher highs. And for a downtrend, you have lower highs with lower lows that you expect to come from those. So this is the example of an uptrend. And we're going to be breaking this down piece by piece and trying to get more and more knowledge from the chart. So this is a line chart. It doesn't have the candlesticks that I mentioned. Okay, so here you can see that from that initial bubble popping in 2000, we had a huge downturn correction, and then we had another correction in 2008. But from that moment, you can see that there was a shift in character where these lower lows stopped and we started making higher highs. That signaled strength in the market, and then it started to have an uptrend. And now you can see that you're clearly having much greater higher highs and higher lows. And that is leading to the moment that we are in today. Obviously, between these periods of continuation or reversals, there's consolidations where you're going to have a range. And a lot of times it's very tricky to trade in a range. Now, you can have taps, maybe 5 to 10 or more taps of the resistance zone and the support zone. And the price will continuously reject and bounce from these different levels before doing a breakout. And sometimes it's really important to understand that a breakout is not where you just enter a trade and buy. A lot of times, this is where the key manipulation happens, where You'll have this consolidation. There's a manipulation to the upside, and then this can break down completely in reverse. So you're stuck in a huge losing trade. So what's important to note here is that when you are in a trade, you should always have a stop loss. A stop loss, unless you're willing to lose what a smaller amount that you put in. But obviously, if you're putting a sizable portion of your money into a position, you should always have a stop loss. Now, one of the
Can you
greatest
explain what stop loss is?
stop loss is, let's say that in this, it's a great question. In this range, let's say you're having a rectangle pattern. Generally, a rectangle pattern indicates a bullish or continuation pattern. So if it comes in from the downside, comes up here, does a rectangular consolidation, it's expected to continue. So when that happens, you see this breakout and you want to see it on a higher time frame level, which I'll mention soon. Remember, higher time frame level is always more important than lower time frame level. And let's say that you enter this trade to go in long, but then you put a stop loss maybe in the middle of this range, because another key trading technique is to get in on the retest. So after you see this breakout, you want to see a retest of this so that if it was in fact a manipulation, it'll dump completely over here. So maybe you don't want to even actually take the breakout unless you see that it's very strong. But entering in at this level, which would be a retest, and you see, let's say that the price retraces here and starts to go forward. That would be a better time to enter, especially on, let's say, a 15-minute candle, etc. But I will get into that in a bit. But let's say that you don't want to lose in case you're totally wrong. Let's say you just keep your stop loss right over here, or I'll indicate that more in like these different time frame candles.
Got it. Okay, so I'm still a little confused. Can you go back?
Hmm.
So not understanding support zone and resistance zone, and then what does it mean when a support breaks and when resistance breaks?
So the market is controlled by supply and demand, which we'll get into, and basically the at support levels, this is where maybe this first reaction, right? A lot of times you don't want to be acting as the market maker because you're probably going to be wrong. Let's say that the market actually on the chart shows you that this level was supported and this one was rejected one time. And maybe it was after a huge run up, kind of like what Nasdaq is doing right now. Then you can see that, okay, maybe the next time it comes here, I'll buy, or the next time it comes here, I'll sell, so that you can actually profit in this accumulation level, consolidation level, before maybe after two or three more taps, it'll break out. So, and this is very key here that I recommend everyone to look at. Go online, go to Investopedia, and look at your basic chart patterns because you'll see which patterns give continuations and which ones signal reversals. A lot of them work out. So a specific chart pattern, I'm just showing, remember, in this talk here today, it's very basic, but this is for the beginner. This is for the beginner who wants to buy and hold for a long time and is going to endure the volatility. So this is a very important pattern. This is the cup and handle pattern where you have two highs, part of the rim, and then you have this low, the big cup, and then you make a small handle. This is an extremely important pattern because it signals a bullish continuation and generally for the largest assets in the world. So, for example, the same NASDAQ chart, that initial 2000 bubble popping, and this huge cup that lasted for 15 years. Remember, the bigger the time frame, the bigger the energy that's stored up, and the bigger the move that comes after that. So this is a huge 15-year cup and handle pattern. It created the cup, created the handle, and this was a huge signal to buy the market. And obviously, it was correct. Next, we have gold. If you've been paying attention to the market recently, you've seen that gold has had a huge rip. And you can see that it also had a long time ago, between the 80s and 2008, there was a cup and handle that led to a 3 year boom cycle. And then from 2011 to 2024, another huge cup and handle. And this breakout was absolutely explosive. And I want everyone to think that the news, don't be manipulated by the news. The news is a huge factor in a catalyst to start moves and to maybe end moves. But at the same time, the news is on your side. When news is coming, it'll signal you to pay attention to what the chart is telling you so that you can position well for the next one. And I highly recommend, if you really want, the next level of trading, you can see I have these specific levels here. I have the bearish pivot, the bullish pivot, targets 1, 2, 3, 4. This was the maximum target I had for gold. Now, when you have a winner, let's say that you were long on gold, long meaning that you bought gold and you're holding it, right? Short means that you sold it and you're in the negative position. So let's say that you were long on gold and it just goes up this high and you sold it off and you didn't get to capitalize on all those gains. This is something that you'll get from hopefully if you join join swing trade group and get these signals because target four, you would have held until target four. You would have seen, okay, once we cross the bearish pivot, now we're bullish. And then once we cross the bullish pivot, we are extremely bullish. And look at that. That you see that small little correction here, the fact that it did not break down over here be under 2,637, it signaled a big buy. So a lot of people did not enter the market here, did not enter the market here, nor here, but on this retest of the bullish pivot is where market entered. And that look at that continuation upward.
Marjan, Saima asked a question. So how would we know when the best time to sell gold would be?
So, so right, the timing, that's very important. And everything that I'm showing here is beginner knowledge. But if you join my group, and which I'm going to actually share you how we do some of this, um, which I'm sharing for free on this chart right here, where you're getting the target four. So I was a very big seller of gold above this target four. And if you've noticed, there was a huge drop in the price recently that actually came after this. So what happens with the market is that they'll create a stop loss or they will sell off after it reaches their target. So maybe not before their target, but after their target. Either way, they're in profit. But if you want to time it perfectly, that requires an extreme amount of, knowledge and experience, etc. But and I'm going to share at least the fundamentals in that. So yes, technically I've been a seller of gold, but recently, because of, how I'm looking at the market, there was obviously a huge explosion last week which potentially put it back into a sell zone. So this is a pretty risky spot for gold being on top of target four. I'm not considering buying gold anymore. I'm thinking about I'm not thinking about holding any gold until the next move, which I'll get to by the end of the talk. So Bitcoin also, you can see it had a 5 year cup and handle pattern over here and where it started its bubble. And I want everyone to pay attention to this, that this was a huge cup and handle. And you can see that this is typical of a bubble where you have these three corrections. You see that are faster and faster. And that led into an absolute mania buying from 5,000 to 20,000. But after it hit that final target, there was an extreme crash. Now, the thing is that if you were here until the end of the video, I'm going to share with what I expect to be happening in the future. And obviously you can join and be more attuned to each phase step by step if you want to, follow along. So another key pattern is the double bottom. Like I said, when you break a support, you lose or break a resistance and you lose a support. These retests are crucial. And when you have a double retest of a certain level, especially at maybe a key level that we're doing with our projected defined ranges, then
Marjan, can you just explain retest again? Like that
so you can
it
see
goes to the
here.
same price twice. It tests it twice.
Yeah, that's it.
Oh, okay.
So you can see here there was a downturn, and
Hmm.
then the market created a bottom. So if you try to be the one who times it perfectly, you probably could buy over here or here or here, and then you get wrecked, you know? So that's not the smartest thing to do. You have to kind of wait for the market to do what it needs to do. Then let's say you got this nice bounce here. Then what you can do if you feel very strong about this being bullish, you set a buy at that same level over here. And then look, you would probably have a very small drawdown and enter in at the perfect time. Big market makers and big moves usually happen over here, making a double bottom. You can see that here. This is an example of the S&P 500. I showed that the NASDAQ created that huge cup and handle, but look at this double bottom from 2002 to 2008. This double bottom is actually what created the targets for S&P 500 up over here. And that's what's so scary right now is that we've been at all-time highs, right? But we're wondering, is it just going to crash now, right? And this is what I'm going to try to help everyone to understand. And keep in mind that Bitcoin chart I showed you before the bubble with the three faster um, corrections. You can see here there's a double bottom in S&P 500. There was a huge double bottom with big dips in 2016. Then we've had another one in 2022 that signaled the bottom of the 2022 correction. Had a double bottom here and another double bottom over here. And there was a great times to buy. And then this is the Dow Jones Industrial also in 2026. Something that I'm showing here is that the NASDAQ, the S&P 500, and the Dow Jones, they usually move together up and down. But the intensity and velocity of their moves differ. And what we can see right now happening in history is if you look at Dow Jones Industrial, when you see the dumps, you see this dump right over here. The dump from the Dow Jones during COVID was extreme. It was much worse than S&P 500 and NASDAQ because we are shifting. My hypothesis is that NASDAQ is being more bullish and over time, and they're slowly switching more money into NASDAQ because of technology, obviously, right? Okay, let's see. We have a question. For the cup and handle, I get the cup comes surge. Mm, mm.
I can read it for you, Marjan. So, Shahriar asked, I have a question for the cup and handle part. I get after the cup comes the surge, but most people don't want to stick to the stocks for that long because sometimes they need to pull the money out. How long do we actually wait and see?
So with like these cup and handles, right?
Hmm.
Um, it's very important as a long-term investor to understand that the more gains you want to see, you have to keep it in the market. If you're looking to trade because you need that money, then there's other options that you can do for swings, right? That I'm mentioning here. But if you really need the money, you need the money. I definitely can't advise someone to leave it in, putting on more risk when that's money that you need. So that's a very personal question. But what I would say is that if you have a very long-term pattern, like this long-term NASDAQ, or sorry, for gold and this long-term cup and handle that took, 12 years, you should leave it in. If it's a 12-year pattern, the breakout is going to be so explosive, which is what we see here. And it doesn't happen in a day. It doesn't happen in a week. A lot of times, if it's a 12-year pattern, you're going to see growth on the monthly level, many months. And I'll get into that. So you will have to hold. If you want to see more gains from big breakouts, you have to hold. And the things that I'm showing you right now for everyone on this webinar is the large timescale moves. And all these large timescale moves that I'm showing, you must hold for longer. And the thing is that what I'm trying to teach here is that using these technical analysis, you can translate them to shorter time frame moves, which have more risk, more volatility, but the same principles a line. So we looked at the double bottom. This is a huge key pattern. So let's say that let's say that you're just looking at the chart, you're just looking at the chart and you're seeing, you're not trying to predict a double bottom, but let's say that you already see one on the chart. Then you see that it's already going up over here, maybe with some good volume. Then maybe you want to buy here. And then look, you're not even having any drawdown. It's a great buy because you're just going to be enjoying that follow through. Now, the important thing is that a double bottom, it needs to be confirmed. It has to break through this level, the neckline. And sometimes it will retest. And the thing is, the chart is very beautiful, and we're going to get into the candles. But the more beautiful something looks, the more pretty it looks, it usually is more powerful. So if you see a really nice W that actually looks like a W, it's probably going to end this last leg up. If it's more vertical, like it's a very strong reaction, you can expect it to hold. But let's say you see that it's going up very slowly, and then it starts to turn like this, like then maybe it's not actually going to be as a nice double bottom. So what happens is maybe after it touches here, it'll just reject, or it won't even get there and reject. So you have to see the velocity of the moves. So these are some examples of these nice double bottoms. See this one, right? This one, it created a kind of a slow uptrend, but it did make it and it finally broke through. And then you can see that the velocity started to increase once it passed. But while it was getting there, it was a little sluggish. And then here, obviously, you can see that maybe this one dipped a little bit too low. But then here, this is a very sharp one. So this one was very strong. So remember, look at the velocity from different reactions at levels. And then
Actually,
again,
Marjan, I had a question. So, what's happening in like the trader's perspective or sentiment, like as it's going up and down, like how are they deciding what to do? Like, are they all looking at this may seem like a very silly question, but are they all looking at this pattern and then deciding what to do next?
absolutely. Because remember, this is not gambling. This is trading. It's all from statistics and analysis and your risk management. So let's say that okay, let's go back to that double bottom. Actually, let's go to this one.
Yeah, I'm just
Say,
yeah, more like because I'm also a beginner, right? So I'm just confused like what are you actually looking at when you're looking at the line? These are just buyers and sellers, right? And they're all deciding what to happen next based off of the patterns.
yeah. So when let's say for this one, right, it created this double bottom that wasn't completely even. So it's not like beautiful, but then you can see that it started to create some kind of motion up. But then look, the sellers are afraid. So they're like, okay, I bought over here, I'm in some profit, I'm gonna sell. And then they sold. And then the price went down. And if enough sellers overcome buyers, price moves down. If enough buyers overcome sellers, price goes up. So you just want to see what will the buyers and sellers do to the price. And you always want to pay attention to price. So here, and then it went up a little bit more, and then more sellers, came in and they took their profit and, left. And again, but then over here, you're making a new decision all the time. These people are deciding, some people are deciding to just hold on. Let's see if it goes all the way there. They're brave. They bought here. They want to wait till they get there. And now that it got there, they're even more confident they're going to hold or buy even more. So the price goes up. So you have to constantly decide how to manage your risk. When you see a good trade, you're saying, I want to put on some risk. I'm gonna buy here. And then you have to decide. And one thing that's really tricky is that if you can get in at the best time, you will make so much money so fast that you will get out of your position so quickly. So the person who bought right over here probably made a lot of money as they went over here and they sold, you know? So you have to see that it goes against your psychology that once you have profit, you feel like selling, where maybe you should be buying more. And then once you have a loss, you think about buying, but actually you should probably just sell and just wait, right? So it's a difference in psychology. So you're always trying to manage this risk. And now I do want to move forward because I think that this is just part two, but we really need to get to the candlesticks. So again, the double top is just like the double bottom, except in the opposite. And then this is a head and shoulders. One of the most famous patterns that people trade is where you have a higher high. It basically, the head and shoulders pattern is effectively giving you that change of character from uptrend to downtrend because you're getting a higher high, higher low, higher high, and then potentially equal low or lower low, and then a weaker lower high. This means that the trend is getting exhausted. It's not able to make a higher high. So then if this downtrend from the right shoulder, if you see that there's a lot of selling volume here, it could be a good idea to get out. If you wait for the pattern to form, then sometimes you will be all the way down here, but then you have this neckline retest. This signaled the negative move. It's there's a famous trader right now, ICC. He uses this method. It's called indication, correction, continuation. And it's a really good strategy that you see the indication of it going down, you there's the correction, and then there's a continuation. So a lot of times if you see an indication, don't get too jumpy. Wait for the correction to really decide what you want to do. So let's say that, you know, let's say for NVIDIA, right? This is NVIDIA. Let's say that you want to try to make as much as you can by holding NVIDIA. If you're holding, it's just going up and up and up and up, and then it starts to make these patterns. Maybe if you sold here, just while it's going up, it's not, I mean, you made profit, right? But you didn't capitalize. So, but if you waited and waited, and yeah, maybe you didn't get the top over here, but you saw, oh, a head and shoulders just happened over here. Let me sell. Then you would get a sell out of this level instead of this level. And then you can also decide to buy back lower, right? If you really believe in the company. Now, what's really interesting with NVIDIA is that I was looking at NVIDIA for 2025. If you remember at the beginning of 2025, there was a huge correction. And what was the leader, the absolutely crazy company in 2024? It was NVIDIA. It took the highest position in the NASDAQ and out of all companies in the world. So if you follow NVIDIA's progression, it'll give you a good indication of the status of technology as a whole. And what happened at the beginning of 2025 is NVIDIA made a double top at 154. And that double top at 154 is going to signal a huge sell-off. And people said that, it's DeepSeek, right? DeepSeek came out, there was a huge dump, but I actually saw the 154 double top and I was already very bearish on NVIDIA. And this pattern happens over and over again where the chart tells you what the news is going to be a catalyst for. Now, this is the meat of the talk, is that everyone, after you see structure, right? Higher highs, higher lows, lower highs, lower lows, that's structure and changes in structure. But the candlesticks, when you look at the charts for the candlesticks, it'll actually teach you so much. So the anatomy of a candlestick is that you have an opening price at a certain time point. And let's say it's the New York Open at 9:30 a.m. or it's the 10 p.m. candle, 10 a.m. candle, or the 11 a.m. candle. All these candles are very important, and there's different amounts of volume. The New York 9:30 a.m. candle is the highest volume candle in general every single day. And what happens is that it opens and then it starts to displace. If the price opens here and goes up, it's a green candle, bullish, and it starts to create this wick. So let's say the price traveled all the way up here to this high, and then the sellers came in and pushed it back down. Now you have this wick. The wick tells you where big money came in. The wick tells you where the big movers are coming in. And then you have to wait sometimes for a candle close. So now let's say this is a closed candle. Now you can analyze what just happened, that the market opened and there was a huge buy. People are bullish. And it was rejected a little bit, not too much. So maybe the next candle will also have a continuation in that direction. The opposite is true for a red candle, where it opens high and it closes low. And candles can change color through through the time period. Each of these candles is for a specific moment in time, whether it be a 5-minute candle, a 4-hour candle, a 1-hour candle, a 15-minute candle. And what I want you to always remember is that the higher time frame candle always over supersedes the lower time frame. And that's what we were looking at this entire time. I wasn't even showing you the candles to make you understand that the higher time frame anatomy of the market is always more important. The lower anatomy can tell you really, what's happening on a day-to-day or week-by-week basis. Now, that same pattern on NVIDIA, if you look at the candles, here I have the 4-month candle. And a lot of people, they look at the 1-minute candle, the 5-minute candle, and it drives them crazy, right? But if you look at the 4-month candle, that's huge. 4-month, 3-month, 2-month, 1 month. That means that NVIDIA over here is created a fractal pattern. At the beginning of 2026, it immediately tagged 154 and started going down. It created this. This didn't happen yet in the future, right? So I'm showing you the future as well as what happened at that moment. So because 2025 came in with a new yearly candle, even 12-month, 6-month, 4-month, 3-month, literally what happens at the start of a new year will just trigger a huge motion in the entire market, lots of volatility. So the fact that it double topped right away created the sentiment of that huge crash that you saw in 2025. And there was other confluence too that I can share with you, at another time. But because you're having fractal natures, now you're seeing a double top pattern on multi higher time frame levels. We saw the biggest crash or correction in history because it was a technical. It was just that it went up so much from what, effectively $10 2 years ago to $150. Created a double top, and then it found a bottom. And for my calculations, which I'll, if you want to keep learning, was that the 156 double top is going to create a target of $100. So, and look, NVIDIA basically tagged in the 90s and reversed back up. So look, that's how you accumulate, that you can sell off and you can save yourself from losing 35% of your money and then buy back and accumulate NVIDIA shares. You would have bought them at a 35% discount, right? So you've accumulated so much and you were able to basically, and maybe instead of making 100,000, you made $200,000 because of one specific trade. And now, yeah, so the key takeaways here, fractals. Always be paying attention to the new candles. And, I wish, I don't I don't schedule when everything happens in the market, right? In the market. But, you know, think about what just happened. Q1, Q2, Q3, they're not just random quarters, right? They're actually 3-month cycles of the market. So what we just saw is the new 3-month candle. And I mean, I wish I got to, share this earlier with anyone who would join the community, but the 3-month candle at the end of March was literally the low. And then as April started in the first few days, the market came completely straight back up. It completely shook out all the sellers, all the scared, loose hands, and then they shifted it back up to accumulate as much tech and NVIDIA as possible. We got a few questions. What tool and website do you use? I use TradingView, which is what you see here. TradingView is probably my favorite tool, and they always have a huge discount on Black Friday, which you can get for the year. It costs probably around like $280 for the year. And I'm going to also share a link for all of you with your email. If it's okay, we can send you a follow-up email regarding all of these different things. So you can use some of my discount code to get some off on TradingView. And let's see. So Nusrat took care of another question regarding Sharia compliant stocks, which is very important. So you can use Musafa's halal stock screener. It's amazing. They put a lot of work and effort into it and really try to support the company because they work really hard, but the market isn't giving them the value it really deserves from this Muslim-owned company. Yeah, I'm not an expert in Sharia compliance, so that's for Nusrat and Musafa, you can always talk to their team. But I talk about the technicals and how to trade companies that you are interested in. Okay, so taking away from here that fractal candles are very important. Higher time frame fractal candles, this is going to be the big moves, right? I want to hold my Nvidia, but where am I going to sell? Where am I going to buy? This is going to tell you for your shares. Now, these specific candles are very important. Let's say that you opened and you traveled high, you displaced to the upside and the downside, but you closed again right at the center, right? That's called a doji candle. And you can see with this psychology, right? This is a science, candle science. It was started in Japan many, many years ago. Correct me if I'm wrong. But this allowed people to really visualize the psychology of supply and demand, which drives everything. It tells you about price, how the market respects and disrespects certain prices. So let's say you have this doji, high wick up and down, tiny body. This signals indecision. Now look at this pattern. This is one of my favorite patterns. It's a spinning top where you have a green candle and a red candle, or the other way around, that has small wicks to the upside and downside and a small body. Favorite pattern. This pattern is basically like a mega doji. It's double the time frame with some displacement this way and that way, where the buyers were overcome by the sellers or the sellers overcome by the buyers, only to go back to the indecision point. And what happened? What does this signal? It's even a stronger signal for a indecision and reversal. So you have to see what happens in the next candle. So for example, one of my favorite trades this last year was on the 4 hour candle. You can see the Nasdaq after it had a huge sell-off. It created this spinning top pattern. And you can see that after the spinning top finished, boom, continuation. That was the low for the whole market after that moment. So that moment could have been where you buy Nasdaq, buy Nvidia, buy all your favorite tech stocks right here because it's signaling a reversal. And very important is to sell at the candle close. Let's say this 4 hour candle, it's 4 hours. Let's say that it didn't close here and it started to actually shift, and then this spinning top wouldn't happen. You have to wait for the fight to finish before you enter. After it entered, look, people bought right over here and they won. Now, this is also key supply and demand. Everyone knows if you take microeconomics, macroeconomics, supply and demand drives the economy, right? For any commodity, any security. If there's demand for it, people want it, and if there's not enough supply of it, the price is going to shoot up. And this can be visualized on the stock chart. And again, remember, higher time frame is better. If you see these supply and demands on a 1 minute, 2 minute, yeah, you can take some trades that'll last maybe a minute or 5 minutes, maybe an hour, who knows? But if you see these trades on a monthly time frame, it could potentially have, you know, huge responses and reactions that will be better for your entire portfolio to manage. Like, let me just huge supply over here. Let me sell. Let me wait until I see another engulfing candle. So let's see. This is going to be so huge. What you see here is a small red candle that afterwards the next green candle, because this is where the science of the candles comes in, is where you have a pair of candles. The next green candle completely engulfs the previous one. And you have to pair them together, right? If you looked at the previous chart, right? Like, yeah, it's not pretty. It's not exactly like this, but you see that it had a huge wick to the upside over here, came back down. It held green. It is a spinning top, maybe not the most perfect, beautiful one, but it was nonetheless. So, and then look at this candle over here. You see how you have this red candle here, but then this big engulfing? That signals a buy. Look, if you bought here, maybe you're in a smaller drawdown, but overall, look at that. Great time to buy after seeing an engulfing candle. So An engulfing candle, this now means that if you engulf a previous red candle, this is now your demand zone. This is where people want to buy. Now, sometimes it's tricky. Let's say that the price goes up like this, right? Because it's so bullish, but you missed the party, right? So what are you going to do? Are you going to buy over here? Okay, you could buy and maybe sell over here, but the real big money is going to wait for the price to come back into the demand zone. And you can be that same player is you just wait for it to come back. Same thing with selling. This is now a supply zone with a red candle that engulfed this candle. Boom. Now you can wait for the price to potentially come back to the supply to sell your shares if you're, bearish because you're like, oh, that was a really bad candle. Let me get out. So now let me show you an example. Um, actually, wait. First, the
Oh, sorry, Marjan. Did you
yeah.
Saima had a question.
Hmm.
She just didn't understand how the chart on the left showed the spinning top. If you could explain that again, the spinning top.
Oh, okay. So, Simon, um do you see this over here? I wonder if I can zoom in.
Yeah, I can see it. It just looks like a V to me, so that's why I was thinking I didn't quite know.
Yeah. Yeah, of course it's a V over here, but I'm not sure. Okay, can you see that zooming in?
Um, yes, uh-huh.
Mhm.
Oh,
So
okay, now there is a little red box and a green box together.
yeah, so yes, this was a V. This spinning top over here is what kind of triggered this V response.
Right, okay.
But what
And
exactly does spinning top mean?
spinning top is that same pattern that we just looked at on the right that you basically have two small bodies of opposite colors with some wicks to the upside and downside. And
Ah,
yeah, it's not this is a spinning top right here. This is a spinning top. And you can see that the example here is the green and red, but obviously here it's red and green, but that's what signaled the reversal.
and then Muhammad asked, "In what time frame is this top?"
So this is a 4 hour top. And that's what's so nice is if you like having like a 4 hour or a day or a weekly, those spinning tops are much stronger than like a 5 minute and 10 minute spinning top. Okay. Now I just want to move forward and just talk quickly about fair value gaps, and then we'll move into just the example before we finish off. So because that's where the real juice. I know everyone wants to know like what's happening in the market right now, and we'll just do some technical analysis and show you. So let's say that you had this engulfing candle that was very bullish, right? What you want to see after this bullish candle is fair value gaps. When you have a series of fair value gaps, that indicates bullishness, strength. And this is the fair value gap right here. It is the high of this wick to the low of this wick where you have, that's the space where the price displaced through the whole level, created another green candle, and then there was no interaction between this wick and this wick. This is an area of fair value. It's not the same as demand because let's say that you created a strong demand zone. You want to buy there, but maybe you won't get that price anymore, right? So if that's the case, then maybe the next best place is the fair value gap. So then you have to really understand what is the sentiment of a certain stock or equity that it'll go all the way back down to the demand because it went up too much or, and we'll show you the example now. And the same thing happens for a bearish fair value gap because the price a lot of times wants to retest this area, this shaded area. So here's an example. Okay. Now again, I'm showing you on a huge time frame. This is the company CoreWeave. CoreWeave, I personally I don't like trading stocks that just IPO'd. I don't like it because there's so much risk and volatility, right? But okay, you think CoreWeave is a great company, you buy it over here, it goes up so much, amazing. You're happy, right? But let's say that you didn't, like me, I don't want to, right? I saw all that. I missed that whole run. But then now I see on the month time frame, these are monthly candles. So what's happening on the monthly time scale? Look at this. A huge fair value gap between this one and this one. a fair value gap with another expansive candle over here, very bullish. But then this next candle, look, it was just too high. It could not sustain more growth on top of that. So what happened? The price came back down. So I marked out the monthly fair value gap over here. And you can see that first, this whole zone created an area of buying. So people bought up this whole zone over here. Boom. Then the next month, you see it goes down over here. The middle of these boxes, of these zones, the fair value gap, the demand zone, the middle is very important, especially on higher time frames, right? Because the price likely won't travel through the whole thing, right? What happened? This middle range of the fair value gap, which happens on TradingView, you can get those middles of the boxes. It just shows up automatically. Look, everyone, the buyers came in. The buyers came in. So it went from $90 to $140. That's 50%, over 50% profit in 1 month, right? That's huge just because you bought it at the middle of this monthly fair value gap. And there's more confluence. Look at this. What do you see here? If anyone can share. Oh, sorry. Don't see anything in the comments, but this is a W. This is a retest. A W at the mid of a monthly fair value gap. That's huge. So what is the result? Big boom. And then look at how well the price respects these levels that we've drawn out, right? After it goes up, obviously this is a supply candle because this red candle, this monthly, it in fact it did engulf this previous one. So it's not a huge supply, but it did engulf. These are very important nuances, the fact that it did engulf. And then you can see that it basically took this supply, it created a supply, and then it used this supply to dump further. So yeah, look, you buy at this 90 and you sell off in the supply zone, and then boom, you saved yourself from that loss. But what happened over here? We literally came right to the bottom of the fair value gap. And this is what the market likes to do. Market likes to buy up the whole zone, consolidate. It bought the bottom. It literally rejected. It whipped the top, came back down, and now made a higher low, signaling a potential reversal. And now we have also this trend line, which creates another wedge pattern that we're breaking out over here. It could be that, look, from last June to now, right? That's over a year of consolidation, but maybe CoreWeave is ready for a pump. So, if you want, you could take on a trade there.
So Marjan, we had a question. So how would you strategize trading between the time frames? So how are you deciding between a 4-hour time frame versus a monthly time frame?
So this is a great, excellent question that basically is what everyone wants to know. And everyone should know the answer to this question, which is risk management and goals. If you have a lot of money, someone who's been working for a long time, build up their 401k, etc., you don't want to lose it. Highly recommend most of your money is going into trades and investments that are dictated by the monthly time frames, monthly and weeklies, etc. Now, obviously, there's options, other ways to make money on a shorter time frame that's a much higher risk. You don't do that if you have $200,000, you don't use $200,000 for that. 90% of it, you should be in these long-term things, right? Now, let's say that you have this technical ability and you want to use maybe 10% or 5% of your money in a separate account to, do these types of trades where you can, put on more risk, but you might lose, right? But you'll lose 4,000 instead of 200,000, right? So, and there's different ways. And the way I like to explain it is that there's a million games in the market. And you have to be good with, and they have a million rules, but you have to be good at the game that you decide to play. So this really is your decision. And the way it works is that the first knowledge you get is dollar cost average, save your money, buy, invest, hold for the long term. That's good. The more knowledge you have and the more flexibility you have with your capital, now you can decide to actually take these smaller trades on the 4-hour. Personally, I think that if you're trying to do, there's the whole gradient, right? what I just mentioned is investing. After investing is swing trading, swing trade group, right? You join me. This is the type of thing that I'm trying to teach most people. Swing trading so that you can position well for the long run. Then there's day trading. Day trading is more for like, the 4 hour time frame and below, 4 hour, 1 hour, 15 minute, where you're literally trying to get into a position and out of a position in the same day. You get in, you get out, you protect your money and your capital, you're good. No more market exposure while you're still holding your long-term investments, right? So I hope that answers your question. The final thing is that scalping, which is literally, some people do very high leverage and very quick 1 minute, 2 minute moves on volatility that is very risky, but obviously you're risking a lot less, so it's okay. So now, so that was our those were all the concepts that we wanted to look at today. But now I'm going to give you, for all of you who stuck around, this is going to really hopefully give you some good outlook on like what's happening in the market. Um, Sorry, am I still sharing my screen?
Yeah, you are. I see market structure.
Okay. So we learned about market structure, higher highs, higher lows, lower highs and lower lows for a downtrend. Candlesticks to understand where the buyers and sellers are coming and where the wicks were showing where the market is responding to certain levels. Supply and demand candles, fair value gap candles, and confluence, just putting these all together so that you have more statistical probability in your trade. Now, what is going on with the market in the long run? Let's say that, um, yes, Uh, Farouk, I have a program. It's called Swing Trade Group, where I'm starting it up on Patreon, where we're going to have a Discord, and there's different tiers. Obviously, if you want long-term analysis to try to, structure your portfolio, etc. Just to educate yourself. Obviously, everything is from, it's your own risk that you take. But the smaller tier is for that. But then the higher tiers, or I have the gold and the VIP where you can actually do live trading with me, where I'm going to be live in the market and you can join me. And the VIP tier also, that I'll let you, talk to me about certain stocks or tickers that I can give you analysis on them, which, for specifically for like, just say an example, this is a freebie for everyone that, I think AMD is in a great position right now. And Immunity Bio is a biotech company that I calculated that its supply zone was going to be at 12.28. The price went from $1 or $2 up to like 12.30, 12.40, and then dumped down to $6. So like that's something that hopefully if you want to join the highest tier and you have your own stocks and tickers that you're interested in, and you want to know what the analysis is, I can share that with you. I can give you up to maybe 5 every single month. So definitely, check it out. I really want to help everyone. This is just the beginning, and we're going to do more webinars. But yeah, so you can join me on Swing Trade Group, and we'll share the link in the email and over here. I'm really here to help the Muslim Ummah. I really want everyone to succeed.
Thank you so much.
Yeah, no problem. So this is the NASDAQ, right? This is the NASDAQ. And let's say that, you're like me, you just grew up. You didn't even know what investing was until 2017. And this is the market. A little crazy, chaotic. And we saw that the COVID correction flash crash was probably the best opportunity in history. And then you're like, well, I missed that too. Now what do I do, right? After the COVID bump, because people didn't expect this kind of reaction from the 2020 crash, right? But what happened? This is the 2 month chart. What is right here? It's an area of demand. So I have marked that out. So yeah, maybe, you see this bullishness, you want to buy it, tagged back into the demand for a little bit here and then continued up. And I actually had a projected value for the top over here, which was, excellent. And then it triggered a huge sell-off. But this is what the market did in 2022. The market retraced into this demand zone because you're not seeing those crazy, levels before that. until this moment in history where this demand zone was created. And the big money, what did they do? They just waited and they accumulated for half a year in this level. And this was probably the next best time in history to buy back stocks in this demand zone. And then you can see that what happened. We came up, we tested the mid of the supply, had a nice reaction, went straight into this fair value gap right here to hold it, because it's a very nice fair value gap, right? Held it, and then this candle, boom, it disrespected the supply, signaling a continuation to the upside. And it also is a cup and handle, very bullish. And that happened in NASDAQ, and that it was the end of the year. And that's when Nvidia started its ridiculous run to explode. Then what happened from 2024, right? It just went up so much. It was just going up and up and up. And we hit a resistance at 2020, 2,200-ish on NASDAQ. And that's where NVIDIA made the double top. And NVIDIA's double top triggered that huge sell-off over here, which basically turned the previous supply into demand. And this is also another key fact here is that when you have your higher highs and higher lows in an uptrend, the previous high can act as a protected high. And that's what happened. And this is called rebalancing. The market totally rebalanced. So all of this weird uptrend that we had before that maybe had weakness here and there, completely rebalanced by 2025 to retrace. And that was the next best time ever in history to buy. And what do we see right now is what everyone, obviously, this is all very important, right? We retested that high, and now a monthly fair value gap right here. See that 2-month fair value gap right here, very tiny, right here. And what happened in March? We just tipped it and exploded off of it. Now, if you remember that chart I showed you with Bitcoin, the 3 faster corrections, this was basically the last one. It's possible right now that the market is going to bubble. And what are we aligned with? The AI revolution. It could be insane. So the point is, if it does explode from here, try to hold on. Because what you see from Bitcoin is that it exploded so much, like it tripled in value before it crashed. So you want to be a part of the bubble. So just hold and, just see what happens. That's what I would do. But everything is your own decision. We're not responsible for, any of the risk anyone takes. So just try to be very responsible. And finally, this is what you would get from the highest tier. You would see my key levels here, where you could see that recently in NASDAQ, I was able to kind of tick the top of the market and this bottom. I actually have some people that I was speaking to regarding this, that when the QQQ basically hit this 556 level, my prediction was, before this green stuff even happened, was that the next day QQQ is going to go up $20. And in fact, it went up $22. And just these types of small moves can be extremely profitable. So, and that's what you would get in the highest tier. So, again, these are all the takeaways. Try to remember them. Try to research these online: market structure, candlesticks, supply and demand, fair value gaps, and confluence, to put them together in the higher time frame to make better decisions. And remember that this is just the beginning. It's very introductory, and the more you learn, the more you earn. Thank you. I'll take any questions now, and I'll be here till the end of the webinar, and you can still follow along on Patreon. Join the Discord group where you basically can chat with me, and we can talk about these different tickers, ideas, what you have. So I really just want to help everyone and guide them in just having more peace in the markets, because I know that it can be very stressful. It's really not stressful if you understand that they're trying to manipulate you, and you just have to do the right thing.
Thanks, Marjan. So we had another question by Saima. So she asked if she wanted to try out a flutter on the stock market, how would she go about it?
Um, what do you mean by a flutter? Like you just want to try out some of these techniques?
Yeah, I wanted to try out some of the concepts you use, and I wondered if there was a way to like test it out or like get experience of it versus I think a long-term investment, which is what I think you're kind of recommending. It's harder to see that versus maybe something in the short term. For
So
myself, a newbie,
you're
yeah.
focusing on short term, you said.
Well, I'm new, so I mean, I've never invested in the stock market. So for me, this is just more about learning.
Hmm. I see. Yeah. So, um, I know that for Sharia compliance, a lot of scholars they don't like options or futures, etc. So day trading effectively, you would be, putting in a significant amount of money and taking it out in the same day based upon the candlesticks. And personally, what I do is I don't like to trade penny stocks. I don't usually even do biotech too much, but what I like to do is trade the volatility of these biggest tech companies because my philosophy is that the Nasdaq and technology, especially focused on AI, are going to be the biggest thing. So I already know that there's an uptrend, and I'm just going to be trading the volatility in that uptrend. So I like to trade, and then as I got more into the technicals, I started to do actually these prop firm simulations. Did you ever hear about this before?
No, and actually, I was like, what is, I mean, I understand what volatility is, but I didn't even know that was something you could invest in either.
So like this, you can see that basically from October, November to now, which is like 6 months, you can see that the Nasdaq from over here to over here, it's basically in the same spot, right? For 5, 6 months. But there's so much volatility here, thousands of points that if you traded, if you buy here, sell here, buy here, sell here, you can make a lot of money, right? And the thing that I like to do now is trade on the prop firms. So I can link it below, and you can use some. I'm working on trying to get some discounts for everyone, but um, you basically buy if you really want to just try it out. There's a lot of upside. Basically, what the prop firm is, if you allow me to explain, let's say that you buy an evaluation for $100, and they basically test you on your ability to trade the Nasdaq, and it's all simulation. So this is not even real. It's not even real money that's going in and out of the market. So that's why I believe that it's halal and okay because you're not selling or buying anything in real life, so it's fine. And then basically, if you hit their profit target, they'll give you a funded account. And then on the funded account, if you don't go down their drawdown, you basically can withdraw 80% of all the profit that you make. So from a $100 account, you can withdraw thousands and thousands of dollars. So this is something that you can look into, and you can definitely follow up with me if you want to talk further about it. A good company that I trust is takeprofittrader.com.
Thank you so much. And do you, I mean, Islamically, in terms of ethics of companies, do you have any advice on this as well? Because, we want to obviously probably invest in things that aren't causing harm or weapons manufacturers or arms companies or environmental pollutants and things like that. And so I was curious about that too.
Yeah, the expert here would be Nusrat and Musafa, her company that she works for, because we obviously want to, keep everything halal. Using their stock screener is really good. But I know that they kind of focus on the financial aspect of it. Obviously how much of their dealings are and profits are in riba, interest. Um, and this is actually a new thing, right? Where potentially so many companies are actually contributing to atrocities and evil in the world. So obviously, and those companies don't actually, actually quantify that into halal haram. So that I think it's definitely something to pray istikara, talk to Allah and to figure it out. if you see that a company's doing really terrible things, obviously no. But then there's some companies that are, if you build a sword, right? Like you're not responsible completely for all the bad people who get it and stuff, unless you want to give it to bad people. But I think Nvidia, according to Mustafa, is halal, but Nvidia is contributing to most of the AI revolution right now, which, obviously people can use it for evil, but it's also used for good. It's just technology. So I think that's the best help I can give right now from my end.
I can
But
also chime in, Marjan, a little bit here.
Mhm.
So in Musafa, we just rolled out a mystery score. And the score actually it's like a Muslim version of ESG. So you can now see what stocks and it's community, it is part of it is community graded. So for example, Martin, if I can share my screen.
Sure.
So for example, if you go on the Musafa stock screener and you type in NVIDIA, you can see that it's Sharia compliant, it's halal. We also grade it from A to D. A minus. So the higher grade you get, the more Sharia compliant it is. Like the 5% rule, like you're allowed 5% of interest. So this is NVIDIA probably has very little interest. So as you can see, you can go on this report, and this report tells you based off of like community impact, labor practices, environmental responsibility, ethical governance, like where NVIDIA falls. Yeah, so we have this rolled out for a lot of the more popular stocks, and we're going to roll it out for more. So as we should be guided by our ethics, especially when we are investing and trading. So this would be a great place to complement your knowledge that whatever Marjan teaches you as well.
Yeah, that's wonderful. Thank you so much for sharing
Of
that.
course, of course. I'll share it on the chat as well.
We have, I mean, I know that this is the same in the States with certain banks, but in, say, for instance, in the UK, the cooperative is very ethical. So they have only invest in certain or allow certain companies, right? So I think this is really beautiful to see this coming together.
Yeah. Yeah, so we can so I know we're a little bit over time. So Marjan, if you I shared your Patreon on the chat as well. And my son's telling me that he wants to go do laundry. Sorry. So, and then we'll follow up with everyone with the recording, inshallah, and we'll follow up with how we'll be doing a lot more of these educational webinars as well. And then we'll be sharing the different tiers that you can join to work with Marjan one-on-one.
Yeah, no, the recording, we would, you can share it with people, your family and friends. But we definitely want to, educate people as things are happening because, I mentioned a lot of things in the webinar for all those who stuck around. So, just be mindful of that.
Awesome. Okay, everyone. Thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh. And thank you so much for your interactivity and asking questions. Because this was our first webinar, inshallah, next one throughout we'll just pause and we'll make sure that you guys can ask questions live. But thank you for chatting and then unmuting. We want to hear people's voices, so that was nice.
And we'll be sending emails, and please, we just want to help. So you can give us some feedback on, obviously, I know this was introductory, but I just wanted to get everyone like a good footing on some of these concepts. So, just give us some feedback on, what you thought was too complicated or, what was very helpful.
Inshallah.
Thank you,
Okay,
everyone.
assalamu alaikum.
Assalamualaikum, Baba.
Assalamu alaikum, Baba.
He said assalamu alaikum, Baba.